Sales of newly built homes have plummeted to pre-pandemic levels as inflation and mortgage rates rise. According to the U.S. Census, sales in April dropped 16.6% from March. The census also notes sales were down nearly 27% from the same time last year. The inventory of newly built homes on the market shot up to a 9-month supply. Normally, there's a 6-month supply. The sales numbers are far below what forecasters expected, prompting more recession fears. Joining us now to untangle all of this is Danielle Hale. Danielle is the chief economist for Realtor.com, one of the web's largest realty sites. Danielle, thanks for being with us. What is going on here?
The housing market is adjusting, and it's adjusting in a big way. We've seen mortgage rates increase roughly 2 percentage points since the end of the year last year. And as a result, housing is much more expensive. Buyers are having to grapple with higher costs of housing, while at the same time, they're navigating higher prices for things like gas and groceries and childcare. And at the end of the day, some buyers are taking a step back and reassessing their options because the costs are just too much. That's why we're seeing some weakness in those new home sales numbers and in other sales numbers across the housing industry.
All right, let's circle back on mortgage rates just a little bit. I guess we have mortgage rates now above 5%. That is quite a hike over the past months and years. What options does that present for consumers? Any?
Well, whether you think 5% rates are high or not probably depends on your perspective. They are the highest rates that we've seen in the last 13 years. And so anyone who's shopped for a home in the last decade or so, this is going to be the highest mortgage rate that they've seen. For shoppers who bought homes in the decades before that, 5.25% rates are really not that bad. So a lot of it depends on your perspective. The key thing to note is that these higher rates are coming at a time where we are also seeing higher home prices because we don't have enough homes available for sale relative to the number of buyers who want to buy them. And high prices and the combination of higher mortgage rates have really increased monthly costs. Monthly costs for new homes are roughly 50% higher than they were this time last year because of that combination of higher prices and higher mortgage rates. And if you look at what builders are building, they're really struggling to build in those low entry-level affordable price points. Roughly 1 in 10 homes in the recent data was sold under that $300,000 price point, compared to 1 in 4 homes 1 year ago. So we're really seeing a big shift in what's available for sale, and it's not geared towards affordable levels right now.
All right, so in many communities around the country, even while people were sort of processing strong headwinds of the economy, various data points, the one thing people seem to be holding on to was this sense of my home's at least holding its value. My home's worth something. Now that you see these numbers and expected price challenges, let's call them, can we see this as a further sign of a imminent recession?
I think it does increase the likelihood as rates go higher, as the Fed tries to normalize policy, it does increase the odds of a recession. It's certainly not their goal. They're working very hard to adjust rates higher, to tame demand without sparking a recession, but it does increase the likelihood. Now, what would that mean for potential consumers in the housing market? It could mean a slower pace of home sales. It is very likely to mean a slower pace of home price growth because of the higher rates and perhaps because of any implications for the jobs market if we were to see a recession come. So I think with those uncertainties swirling right now, it's really important for consumers to be prepared and focus on themselves and their budgets when they're getting into the housing market, making sure that they're on good financial footing so they're setting themselves up for the best possible outcome when they're buying a home and getting into the market.
Okay. Danielle Hale, chief economist with Realtor.com. Thanks very much for your insight. We appreciate it.